But you can see there the Hang Seng has been swinging around a little bit today, just marginally off, around 0.3% down.
And Randgold has shown us why miners are bouncing back.
Yeah, you've got that mega tie-up on the cards between Xstrata and Glencore. Miners generally have been doing pretty well after a disastrous 2011. Commodities seem to be performing pretty well, and Randgold has proved why. Fourth quarter profits up a whopping 340%, or nearly a fourfold increase in its fourth quarter profits to around $115 million. Japanese companies haven't been doing well. In fact, lots of the household names making big losses in the last quarter. But Japan Tobacco has at least managed to turn a decent profit up around 70% as well. Suzuki, although profits are down for the 9 months up until December of last year, you can see they're still managing to eke out around 400 billion yen in profit.
Now, another weekend of deadlocked talks in Athens finished with exasperation in Brussels. The EU has given Greece a fresh ultimatum: agree on vital structural reforms or risk losing that second bailout. It's a double trouble for the coalition, which is now battling two fronts against the unions and private investors. Yuka Roya explains.
Greece is in its 11th hour, yet it still hasn't agreed a way out of the crisis. Sunday's meeting between Prime Minister Lucas Papademos and his coalition partners bore no fruit. Despite pressure from international lenders, some refused to accept further wage and spending cuts.
I will not contribute to the breakout of a revolution by the new poor that will then engulf the whole of Europe.
At stake is a second bailout package worth €130 billion, funded by the EU, the IMF and the European Central Bank. Greece desperately needs the money in order to avoid defaulting on its debt repayment on March 20th, but it's been pending since October. The so-called Troika, the international creditors, demand Greece impose more austerity measures that would include job and wage cuts. The head of the Eurogroup, Jean-Claude Juncker, had given a stern warning ahead of the meeting.
If we were to see that everything was failing in Greece, then there wouldn't be a new programme. That would mean a default in March.
On the sideline of Sunday's meeting, Prime Minister Papademos and his finance minister also met representatives of major banks that own Greek debt. As part of the European rescue deal, Athens also needs to clinch a deal with private creditors to swap Greek bonds into securities, effectively writing off €100 billion in debt. The Prime Minister said political leaders have agreed to cut this year's spending by 1.5% of GDP, though details weren't forthcoming. Talks are to continue Monday.
So we'll keep an eye on those talks for you. We're due to resume in Brussels at some point this morning. But of course, this deadline comes just weeks before Greece has around €14 billion of debt maturing, and sets out a very slippery slope potentially for the Eurozone's weakest member. A little earlier, we asked our correspondent in Athens, Natalie Savarakas, to set out the potential scenario for Greece.
Well, Greece is very much on the brink of a disorderly bankruptcy. Now, if the party leaders backing Greece's unity government are unable to reach an agreement with the country's creditors, that the debt-strapped country will be unable to tap into the new €130 billion bailout deal, which is absolutely vital for Athens to avoid a full-blown default next month, as it cannot cover the bond repayment due on March 20th, and that equates to some €14.5 billion. But what is equally important is that what is tied to the second loan is a plan by private financial institutions to write down €100 billion of Greek debt. That's at least a 50% haircut. Now, the three Greek party leaders and the prime ministers will resume their talks in just a few hours in a last-ditch effort again to clinch this deal. Unions, meanwhile, are organizing protests to oppose all this agreement because they say they're just simply fed up with all these new measures that are just pledging a bleak future for the country.
Let's stay in the Eurozone because there are growing concerns that Portugal is also entering a default territory. The country's borrowing costs have soared over the last 7 days. At one point last week, interest on 10-year government bonds hit 18%, though they've since dropped to 13.5%.
Yeah, and in Portugal, as in many southern European countries, it's the small and medium-sized businesses that are taking the brunt of all the difficulties there. In fact, the latest figures show, according to the government, that 60% of small and and medium-sized companies went bankrupt over the last 12 months. With even more austerity on the cards, small business owners can now only hope and wait that even more austerity doesn't eat into their bottom line too much. Jen Carswell reports.
No workers and no work. Despite these fully stocked shelves, this small business owner is preparing to close his doors for good.
In the second half of 2011, in our case, the situation collapsed because the work decreased dramatically. I'd say it dropped by about 50%.
This modest construction firm is just one of too many casualties of the financial crisis. In total, 10,000 small and medium-sized businesses went bankrupt last year.
In terms of companies going bankrupt, it's the micro companies and the small and medium companies. We're witnessing a great amount of small companies going under.
These companies are the backbone of the economy, making up 99% of Portuguese businesses. And without the cash buffers of bigger companies, in tough times they feel the squeeze when the money chain breaks down.
We have this weird and terrible situation in the Portuguese economy whereby companies that have customers, orders and suppliers, stable businesses, are in danger of closing down because of how long it takes to get paid, and for them to pay their customers like they used to be able to do.
And the state is one of the worst offenders. Local authorities owe more than 900 million euros to construction companies alone. Taking upwards of 7 months to settle their bills, many businesses may not make it to payday.
Just before we go, a small update, no pun intended, on the Facebook flotation. You remember, Claire, we were talking last week when we looked into the filing of this company that really there was concern, particularly from Mark Zuckerberg, about exactly where the revenue would come from in this new floated company. There are reports in some of the financial papers this morning that Facebook is going to start putting adverts on its mobile application on smartphones. It's resisted doing that because it's not really sure what users will make of that, whether they're really going to be into the idea of having these, what they call sponsored stories as part of their newsfeed. Reports saying that will happen from March. So keep an eye on that one, particularly to see what the kind of reaction is among Facebook users.
All right, thanks very much, Owen, for that look at the day's business news. Do stay tuned to France 24, all the latest headlines coming up in just a couple of minutes.